So in this video, I'm going to cover Coinbase. If you've ever been interested in investing in crypto, but maybe you would rather buy the stock than actually buy individual cryptos or get a wallet and all of that stuff, that can be a little complicated. Coinbase is one of the top crypto stocks, and they're actually in the S&P 500 now. So I'm going to analyze different aspects of the stock and figure out whether or not they might actually be a good long-term deal. So as you can see, they're actually having a great day today. They're up 3.99% today on the 13th of January 2026. Over the past year, not that great. Over the past 365 days, barely positive at all. Over the past 5 years, actually down 26%. So we're actually going to get more in depth about them. They are still a stock that a lot of people want to talk about. And again, crypto, of course, is controversial, but also built a lot of hype over the years. So I like to look and see, okay, well, what's some of the latest news? What are they working on? What would maybe lead to some great deals going forward? Have they already secured some great deals? Is there any regulatory stuff? Is there any regulatory stuff that we need to worry about? Things like that. So if we look at news here, Coinbase is dealing with a mixed analyst sentiment, but one of the biggest things that pops up here is the Clarity Act. So the Clarity Act here is another form of possible crypto regulation, which could end up hurting something like Coinbase going forward, which is literally like a 100% crypto marketplace. So that's pretty much all they do. So anything that could regulate crypto in any way is going to usually be a bad sign for Coinbase stock. So that's essentially what the Clarity Act is. And this is very new. So we're waiting to see what could happen with the Clarity Act, especially in the US. Now, they've also had other legislation in the past, like the Genius Act, that actually ended up benefiting them because it helped create the first federal framework for dollar-backed stablecoins. So some other things they've done, they've had some more product innovation like integrating Chainlink CCIP for wrapped assets and things like that. But other than that, I mean, essentially they are just one of the top dogs in terms of a crypto marketplace. Another thing to look at as far as fairly recent news, Q3 2025, they beat EPS by 35.89%, revenue beat by 3.34%. Now they did miss on portions of these in the other quarters of 2025. They also had a very strong Q4 back in 2024 as well, as you can see, up 128.96% and with revenue up 23.7%. So as far as guidance, another thing we have to look at, not only just company guidance, are they bullish long term, which a lot of companies will find a way to act like they are, and then also analyst ratings for guidance. We will get more into analyst feedback here in a little bit, but if we look at some of the 12-month price targets, they hover around 360 to 380 in that range, which would be very good compared to right now being at $252.69. So they would be up another $100 if they were to even get around the low end of those estimates. So while they do have some mixed analyst ratings, generally they have a pretty bullish guidance going forward. So now let's get more into the numbers on Google Finance, Robinhood, etc. So if you look at their PE ratio is actually quite reasonable at 21.93. Now this is one where you have to really expect lots of growth. They are a growth stock. You're not going to get a dividend from them, unfortunately. So this is not one of those safe dividend stocks if you're someone who's trying to collect right now. Maybe you're on the older side and you are around retirement age, for instance. You might in some scenarios, again, this is not financial advice. I don't know your specific situation, but people usually later on will switch to dividend stocks, and this is more of a high growth, maybe long-term stock. Now, we touched on price a little bit. If you look at, say, the past year, they're only up 0.59%. Over the past 5 years, they're actually down 26.11%. So not quite ideal if you look at that. And if you look at their past 3 months, which is another period I like to look at, obviously, just because something looks good or bad historically doesn't mean that's going to be doing that going forward. But their past 3 months have been pretty rough, down 30.4%, as with many stocks, but Coinbase, that's especially bad, of course. They also have not been a publicly traded stock for very long. So if you go to Max and you see that's pretty much the same as the 5-year numbers, that's why. It hasn't been public very long. If you look at assets versus liabilities, I wouldn't say that's too bad. It's at least a pretty close to a 2-to-1 ratio of assets to liabilities. Price to book is 4.08, which is pretty low. It's not too bad. Return on assets is 4.13%. That is actually kind of low. I usually like to see at least around 5 or 6%. Return on capital is also pretty low. Usually you want something like closer to 8% on the low end, and that is a little concerning. I also like to look at the price to earnings ratio on Robinhood. Sometimes it's a little different than the one you see on Google because they calculate them in different ways. Their price to earnings ratio is about the same as the one on Google, so nothing really to report there. You can also see what Robinhood users, hedge funds, and insiders are doing as well. I would take a lot of this with a grain of salt, but one thing that's kind of interesting to touch on is the sell volume is a little bit high yesterday, because maybe that's partially because it went up a little bit. But hedge funds, if you look at what they're doing, they decreased their shares in Q2. And then there was also a 91% sell score from hedge funds in Q3 of 2025, if you care about what hedge funds are doing. As far as insiders, now this is another thing you take with a grain of salt. Insiders could be people who work there, directors, chairmen, CEOs, etc. A lot of them will sell, especially towards the end of the year, to take some profits or for different reasons. It doesn't mean that it's time to freak out if you ever see like an insider selling. Analyst ratings in general, while somewhat mixed according to Google Finance, they still are majority on the buy side. 68.4% out of 38 Wall Street analysts are saying that Coinbase is still a buy. And hold, they have a 23.7% hold score, and 7.9% give it a sell score. So still in single digits for the sell score here. You can also see their earnings kind of estimated over time. You see that they are mostly beating on earnings, but they did miss in Q2 of 2025 pretty badly. Other than that, Q3 seemed to be pretty positive as we went over, and every other quarter historically over the past year or two has been pretty solid. So Q4 we don't know yet, but they actually lowered expectations a little bit between Q3 and Q4, even though they beat on expectations in Q3. Not always the greatest sign, and a lot of times the stock will go down because of that. It's probably explaining a lot of why their stock is down in the past 3 months, because they lowered expectations. But we'll see how they do. Another thing I like to look at is the EV to EBITDA ratio here, which is kind of like an alternative to something like a PE ratio. PE ratio can be great to use as just a general baseline, but it's not something that by itself you should make all your decisions on, of course. There are many different indicators when it comes to stocks. And one good one here that's a little bit of more of a raw number that can't be affected as much by accounting or tax loopholes and things like that. So this one is a 14.69. So one thing you can look at is the number itself, which that's actually, I would say, fairly low compared to a lot of the stocks I've covered over the past couple of years. But if you look at the comparison to companies in the capital markets industry, which can be kind of tough to compete with in terms of getting a low score, then you have them being ranked worse than 60.15%. So they're kind of in the middle, slightly on the worse side out of 527 companies in the capital markets industry. The industry mean is actually 10.99. So not by a lot, but still could be a little bit better. Now their PEG ratio is actually a 0. That's their forecast 12-month forward PEG ratio according to NASDAQ. So this is another alternative to something like a PE ratio where it actually accounts for growth over time as well. It's good to have a lower number. Typically anything around 1 or lower is really good, could potentially be very good value. But being a 0 is also a little suspicious. So it might be because they've had pretty much no growth since they've become a publicly traded company in terms of their stock itself. That could be part of it. So it accounts for growth to go with the PE ratio. So that's one reason that even though it's really low and normally a really low score is good, that you have to also think about that the growth might be an issue here. So I wouldn't get too excited about the PEG ratio. I might even just throw this out when I'm evaluating this company. Now, one thing I haven't seen a lot of other investors talk about is how well run a company is, because it's hard to put a number on something like that unless you actually know someone personally or have some sort of insider information. It's hard to know. So the thing about Coinbase is, and pretty much any major company that's publicly traded, they're going to have a lot of employees, and you can check what their employees say about them. They're going to know better than just about anyone if a company is well run. That's why I like to check Glassdoor, because it's basically the gold standard right now for employee reviews at a workplace. So one thing, they're an engaged employer. That's a good sign. Coinbase does have a 3.6 out of 5-star rating, which I would say is fairly average. Anything around 3 to 3.5 is usually pretty average for a score. Now, I wouldn't mind seeing it a little bit higher, but that's pretty close to the threshold I usually look for. Now, only about half of them recommend working here to a friend, so maybe conditions could be a little bit better. But if you look at their approval rating as CEO, I would say that's pretty strong. 70% is a pretty good score. That's pretty close to what I would normally look for as well. So even though these scores could all be a little bit higher, especially the recommending working here to a friend, the overall rating's pretty close. CEO approval is pretty close to what I would like to see. I wouldn't say anything on here would really deter me from making a buy decision here if I was looking at buying this. Now, we're also trying to beat the S&P 500. The whole point, in my opinion, of trying to buy individual stocks is to beat the gold standard, which is the S&P 500. So historically, the S&P 500 has pretty much averaged 10 to 12% returns per year over time since its inception, which was like in the 1920s. So you are trying to beat around 10% a year by investing in individual stocks. It's not crazy, but also if you think about how there can be periods of just stocks falling in general, the S&P 500, the Dow Jones going down for years after some sort of collapse like 2008 or something like that, or the dot-com bubble, then you start to think, okay, well, you can play it safe, just buy the S&P 500. If you're going to buy individual stocks, you really need to be confident. So if you look at the past year for the S&P 500, it's still a pretty strong year. That's above average compared to their historical yearly average over the course of basically 100 years. So 19.35% is pretty solid. And the past 5 years, 84.74%. That's really hard to beat. Now, we could be going into a recession. We don't know for sure. There are a lot of indicators that point that way. But if you look at what you might be able to expect from Coinbase. Now, if you just look at historic numbers, it's clearly obvious that they have well underperformed the S&P 500. Now, if I look at my indicators for certain numbers on top of just the analysis of what they do, where I think crypto is going, I think crypto will continue to grow and be popular. I do think there are a lot of skeptics out there. Ever since the FTX deal and all of that, there have been a lot of people that have gotten burned by crypto. And I had to learn some my own lessons the hard way from crypto. But again, you have to look at it without bias. Crypto in general is not necessarily evil. It's just there are not as many regulations, so you have to be extremely careful. That's why a lot of people invest in something like Coinbase as opposed to trying to pick and choose different coins. Now, overall, if I had Coinbase in my portfolio, which I do not, I would probably be selling. Again, this is not financial advice. In my situation, I am investing longer term for growth. So that kind of shows you my goals. I don't know if I want to put money in them right now. Even though they are maybe at a discount, if you believe in them long term, they haven't proven enough to me yet. And I'm not so sure that these upcoming possible regulations like the Clarity Act and the state of the U.S. economy is going to necessarily be good for them. You could argue that maybe the dollar value going down helps crypto, but so far that has not really translated to gains for Coinbase, unfortunately. Now, if you're someone who doesn't have Coinbase at all, then you can't sell. So you would be like, okay, I can't hold it, I can't sell it. Like if I had it already, I would not hold it. I would sell it most likely. Would I buy it? Would I think I'm buying at a discount? According to the PE ratio and some other numbers here, there's a chance that you could get some growth and you could be getting it at a discount right now. And if some of this Google Finance news is true, that people are putting like a $360 price target on there, then yes, you would be getting it at a discount technically, according to them, or I should say hypothetically. You know, if I had $250 to buy either a little bit of VOO in the S&P 500 or to buy one share of Coinbase, I would put it in VOO right now. Not financial advice. Let me know what you think, and I'll see you in the next video.